do the evaluation, now the longest period is 4 months. So we will have to, longest period is 3 months. So we have to use 4 months as an evaluation. So let's say if we close in the first, second, third, and the fourth month. Now you see, if you close in whichever month you close, if you close only, you have to pay external printing fee, which comes to $9,000. Every month you have to pay $9,000. Okay. Now we have to take one by one and ask ourselves, what are those things that we still have to pay even though we have closed it? Okay. The customized paper. Okay. Now the paper will cost you $4,000. So each month you pay $4,000, and you must continue to pay for how long? 3 months. That means the first month, second month, and the third month you cannot avoid one. You must pay. But the fourth month onward, no more, because the 3 month notice served already. So fourth month you don't have to pay for paper. Now, so now you buy the paper, you're not going to use also, right? So what you do? You sell. So the disposal of the paper. Now how much you get from selling? 20 per thousand. So 20 per thousand means you will actually get back 80,000 times 20 per thousand. So you get back 1,006. Can get it? You follow back the formula, 80,000 times 50 out of 1,000. Now you sell back at 20. So you follow the same formula. Okay, that's for the disposal of paper. Now what else you cannot cancel? Ink. The ink you must have how long? 1 month. That means 1 month you still have to pay. So 1 month you got to pay for the ink, 720. And again, class, the ink you buy, you're not going to use, then you sell back. So when you sell back the ink, you sell for 0.5. So the disposal of ink, you get back 200. Yes. Okay, so even you close down, anything else you still need to pay. Now the other paper don't need to pay. Because that one no contract, correct? A machine you have to pay. Machine you got 2 months contract, only you can 2 months notice only you can end. So you still need to pay rental. Another 4,500. 4,500. Now that's it. The variable overhead don't need to pay one. Then these employees and the fixed costs are not relevant. So again, class, what does it mean? That means even after you close your printing, even you pay the 9,000 to external printer, these are the costs you cannot avoid. You still have to pay. So the net cost to you for external printing, the cost of external printing, the first month will still be $16,420. The second month is 15,900. The third month is 11,400. fourth month is 9,000. See or not? That's why from the fourth month onwards, you only pay just the 9,000. Everything else no more in. That's why we say we follow the contract, the notice. And you compare this with the internal printing, which is 12,550. Internal is cheaper one. That's why the first month cannot close one. Second month also cannot close. But if you compare the third month, now it's getting cheaper than if I do external, compare with internal. And that is even if I go and buy the paper, I sell back, it's still cheaper. That's why the third month onwards is where I will start closing down. So I will not do any printing myself in the third month. Okay? That means third month onward you start. Now then of course the fourth month onward you enjoy full saving. Because fourth month your cost is only 9,000, whereas internal printing is 12,550. Okay? You shall close beginning in the third month itself, because you already enjoy saving. Okay? Now that's closing down plus timing issue. Okay, now can we turn to page 34, see one more scenario. Okay, we look at further processing decision. Now this further processing, I'm not sure in F2 you got or not, but I believe F2 you must learn process costing. So when you finish process costing at the back, then they will tell you a bit about further processing. Okay. Now that's why we are not looking at process costing here. So you don't worry about all these measuring what normal loss are, abnormal loss are. Okay. Then what cost per equivalent unit, that kind of thing all don't have. Okay. Now we just want to look at the decision making aspects. So basically to us, we want to know if you have one product that you can further process and improve it. Now do you want to do that? Now obviously to us is, if you further process, do you make more? You don't make more, then you further process for what? So it must be because you believe that the profit is there, then you do it. So that's why for us to know whether further processing is worth it or not, is we want to see whether you see any extra gain. Now example, so I'm telling you that we have product X, that we have 30,000 liters of X, which costs us $5 per liter, and we are selling them at $8. You have a chance now that you can further process X into Super X, a better product at higher price. So instead of $8 now, you can sell at 12.5. Just like the Shell like that, you have this V-Power Racing. So last time they don't have, now they do another one for you. Then it's more expensive. Alright. Now which obviously think logically, if the thing does not make more profit, why they want to do it? Okay. So obviously that's something that you got to pay more, alright, and they earn more. So now if I want to further process, further processing will incur a cost, which you must see carefully when they tell you the cost. The cost is based on what? Now this is cost based on input. Okay? So it's further processing based on input. And at the same time, they tell you there will be a loss. So whatever you put in later on, you don't get back the equal amount. Now when there is a loss, the value that you derive will obviously be affected. Okay. So now the question is, do you think it's worth it to further process X into Super X? Now, how do you know whether it's worth it or not? Yeah, you must work out whether do you get any extra gain. I mean, if there's no extra gain, then why should we do it, right? Okay. Now, how do you know if there's an extra gain? Now, we always take incremental revenue. How much extra revenue you're going to get minus with the incremental cost minus the incremental cost. Okay. How much is the extra revenue? How much is the new revenue you're going to get from product Super X? 1 liter is 12.5, right? Okay, how many liters you going to have? Is it still 30? 30 is what you have at the beginning. By the time you finish until here, do you still have 30? No more, right? Because they say that whatever you further process, there is a 10% loss. That means by the time you come out, you only left with? Yes, you left with 27. Because it's a 10% loss. So by selling the improved product, you're going to get a revenue of 337,500. And if you don't do the further processing, how much you're going to get when you sell product X? You sell at $8 and you have 30,000 liters. So you have 240,000. So revenue-wise, further processing will give you an extra return of 97,500. But you must understand, the further processing is not free, right? You got to pay. So you have to pay the further processing cost, right? What's the extra you have to pay? Now you have to pay $3. And the $3 is based on what? Input. Input is before the loss. So it's $3 on the 30,000. So it will cost you 90,000. Well, but if you compare the two figures, you actually still can see that there will be an incremental gain of 7,500. Okay. Now, so in a nutshell, further processing is like that. They just want you to work out how much extra you get, the incremental revenue, how much extra you pay, the incremental cost, and do you make a profit or do you make a loss? If you make a profit, then you go ahead. Okay. Now, of course, questions could be longer with more detail. So take a look at page 35. Right, they would like us to evaluate whether Mirando should proceed with the further processing to convert TRX7 into VTX11. Okay. Now Mirando sells a special additive called TRX7, which is added to a fuel running vehicle as a fuel saver, power boosters additive. TRX7 is claimed to be able to save 5% of the fuel, increase 10% of the power. The selling price is $30 for a bottle of 100 ml. Miranda is currently deciding whether to launch an improved version of TRX7, the VTX11. As a pilot project, they intend to convert a quarter of TRX7 into further processing, and the current production level of TRX7 is 50,000 liters. Now the further processing would involve additional liquid called GS2 to be input at completion stage of the further processing. 2 liter is required for every 10 liter of TRX7. It's a very highly expensive liquid which is purchased for 3,200 per 5 liter. And further processing would have a loss of 5% at input stage. Now additional labor will be engaged for further processing. It is estimated that the workforce with fixed pay would be engaged, which create an additional capacity of 5,000 hours per period. But only 80% will be required for the further processing based on the current conversion quantity. The excess will be left idle. The cost of the workforce is estimated to be 300,000. New machines will be hired to perform the mixing process, where GS2 will be mixed into TRX7 at the end of further processing. Now every machine would cost a rental of 250,000 per period, and they have a capacity of 6,000 liters. Variable overheads are charged based on labor hour work in the conversion process at the rate of 45 per hour. Now VTX11 will be packaged in a bottle of 80 ml and sold at the price of 40 per bottle. Now 400,000 were spent on researching and experimenting VTX11 to make sure that it's capable to outperform their existing product. Now, so based on this, they would like us to evaluate. Now, do you think now is more worth it to further or not to further process? Now, you can see the questions got more detail. Now, but the concept is the same one. So if you want to approach and evaluate whether it's worth it or not, you have to do just the same way like just now. First, work out how much is the incremental revenue. And how do you work out incremental revenue? You need to know what is the sales for VTX11 and how much is sales for TRX7. Now you do this for me. You can find these two figures. I believe you can find everything else. Okay, so how much would the incremental revenue be? Okay, I just want you all to try. Okay. Now it's very important you are very clear with the quantity. If not, you cannot get the answers. Okay. So they have 1/4 of 50,000 of TRX7 that they will further process. So this 1/4 of TRX7, when they do input into further processing, they will suffer a loss of 95%. Meaning you only left with 11,875. Now this is at the completion of further processing. You finish it, right? Then they need to do mixing. So the mixing is where GS2 is included, is put together with this, where they say 2 for every 10 liter. So 11875, 2 for 10. That means you need 2375 of GS2. It's just a mixing process, so there's no loss on it. So the quantity you'll be getting is 14250, because you add up the quantity. Okay. So class, the VTX11, you have 14250 liter, and your pricing is based on 80 ml. Okay, your pricing is based on 80 ml. So if I convert it into bottles, it's 1,000 out of 80. And the price now is $40 one bottle. So the revenue that you're going to get from VTX11 is this. Now for TRX7, you bottle them per 100, and the price of TRX7 is 30. So the incremental revenue is double 375,000. Okay. Okay, now how much is the further processing cost that you need to pay? So the further processing cost, if you follow the requirement, the question tells us, number one, now you need to buy GS2, okay? Now based on what we calculated just now, you need 2375 GS2, that the price is 3,002 per 5 liter. Now that itself will cost 1520. Now you need additional labor, and the question says that even though you only need 80%, but you need to take all the labor with you, so you don't have a choice. So the workforce will be 300,000. Okay. And you need machines to do the further, the mixing, okay? Now with the total quantity of 14,000 liter, you need 3 machines, because your machine capacity is only 6,000, correct? No? So in that case, you need at least 3. 2 is not enough. So you will need 3 machines. That each machine, you gotta hire them at a rental of 250,000. Now that will cost you 750. Okay. Okay, then the variable overhead. Now variable overhead is charged according to labor hour. And the hour that you actually use is only 80% of it. So it's 80% of the 5,000 hour. So actually it's only 4,000. And the rate you charge is $45 an hour. So the cost will come to 180,000. Now research costs would be sunk, so it will not be relevant for our evaluation. Okay. Now what else that we need to bring in, or we have got everything here? So the GS2 is done, labor is done, machine is done, the variable overhead is done, all here already. Okay. Now so we've taken into account all the costs. So 3375. Now we will get an incremental gain from further processing. So if you ask whether worth it or not, the answer is yes. Okay, so it's worth it that we should further process because we have more return. Okay. Now this is how you deal with a further processing decision. Okay. Now I'm going to go to the last scenario now in page 36. Right, it's to do with outsourcing decision. Okay. Now what do you mean by outsourcing? Outsource means get someone outside to do the job. That's why it's called outsource. Okay. So now we even have a concept called crowdsourcing. A new term we use now called crowdsourcing. See, outsourcing normally is you approach one company and say, okay, can you do this for me? And then you're going to get them to do the job. Now, crowdsourcing is the other way around. You tell someone that, hey, I got this job. Who do you think that you all can do the job? Come to me, offer me. So it's like get people to tender like that. So you're putting it to a crowd and ask the crowd who can do the job, and then from there you choose. That's called crowdsourcing. Okay? Well, anyway, it's just a term that you need to know. Okay, when we want to do outsourcing, it's quite similar like make or buy. Okay, I look at it, it's quite similar, like make or buy, or like a close down decision. But the only difference is usually when we do outsourcing is usually services. It's not so much on product. We don't say outsource product. Okay? We close down the department, but we outsource the service. So that's why if, like, for example, your own accounting department, you outsource. Okay? Your payroll department, you outsource. So same thing. If I want you to evaluate whether outsourcing is better, right? Now what you can do, the approach is the same. You can always compare. If you do it on your own, compare if you outsource, which one do you think is cheaper? Either you look at the differential cash flow again, or either you calculate both, myself and outsource. Okay, so you can see a differential, or you compare both, either way. Okay, so I'll start with an example in page 36. Look at this question. Right, it says that advise Prentice whether it should outsource its marketing function. And what are the considerations for and against outsourcing? Okay, first of all, the Prentice is currently maintaining its own marketing function and is considering outsourcing the function to a professional marketing agency. Now, the current cost of maintaining the marketing department, so if they have their own marketing department, the rental is 40,000, a portion rental. So they are sharing the premise. Okay. The salary of the marketing staff, electricity and utility, general administrative overhead. Now, if Prentice chooses to outsource its marketing function, the professional fees would cost 30,000. Now, the existing space occupied by the marketing department will be demolished, and they will use them as a showroom. And this is expected to generate an additional sales revenue to the company by 60,000. Now, Prentice has a CS ratio of 25% for this product. A few employees would be maintained, represent a quarter of the existing marketing staff salary, and will be transferred them as a showroom staff. And in addition, their salary will be increased by 12,000 per annum to account for the change in job responsibility. The remaining staff will be made redundant with a redundancy payment of 70% of his salary. Now, usage of electricity and utility shall increase by 20% by their existing if the marketing area will be used as a showroom. Now, so now they are thinking to close down their own marketing, which obviously after they close down the marketing, they want to convert it as a showroom. Then things will be a bit different. Okay. So now if you want to make a comparison, right? So we can compare it in this way. Now, let's say if you do your own marketing and if you do outsourcing. So if I do like that, right, that means I'm comparing both. How much do I pay if I do my own? How much do I pay if I go for outsourcing? Okay, now here example. Okay. First of all, they tell us about the cost of maintaining their own department. And then they tell us how much you got to pay if you do outsourcing. Okay, so I list down the different. Now, you don't have to pay the outsourcing fee if you do it on your own. But you have to pay outsourcing fee if you do externally. Now, that's the difference. Now, that's why if you want to do a differential approach, Okay, you want to do a differential approach. Then you just take the difference of these two. Then you're going to put here as 30,000. So this is going to be a difference of 30,000 to be outsourced. But it's not just outsourcing alone that will be different. There will be a lot of things which can be different. For example, if I now look at the cost, rental. Now, will there be a difference in the rental? Now, if I do my own and I outsource, will the rental change? The rental won't change. And anyway, the rental is not relevant as well because it's just an apportion rental. Because so the rental is not relevant because there's no difference. Now, that's why you see class. Even if I put in the figure, let's say you say, okay, if I do my own, I still need to rent. I pay 40,000. I outsource, I also need to rent, also 40,000. That's why the difference is what? 0. Anything that there's no difference is not relevant. So that's why those students who can understand and use the differential approach, they will find that there are certain things they straight away ignore it because it's not important, it's not no different. Same, 0. The difference is 0. So if there's no difference, they are not relevant. Okay. Now that's why rental wise, I just put a nil because this is an apportion cost. It's not even a real cost to you. Okay, what about the salary for the staff? So now you go on. A few more figures. So you just have to go on with the list. How much cost you have here and how much cost you have here. And then later we see which one is better, outsource or maintain. Right, so they say the salary now is 48,000. But if you outsource, right, then some of the employee will maintain. And the question said that it will be a quarter of the current amount. but you must increase it by another 12,000. So this is what happened. So you take 1/4, then you increase it by 12,000. So the amount will become 24. Okay? Now there's also a redundancy payment. Now I'll come to that later lah. Okay, electricity wise, they say that if you convert it to showroom, the usage will then increase by 20%. So now the amount is 16,000 a year. So if you outsource, this figure will go up by 20%. So it becomes 19,200. Okay, after electricity, now the general overhead absorbed is not relevant. There's something that is nothing affected whether you outsource or not. Okay. Now then the next thing we see in the questions that's relevant is because you convert it to showroom, you will then get additional sales. So additional sales will bring you additional contribution. Now the additional sales is 60,000. You have a CS ratio of 25%. So 60,000, 25% will mean a 15,000 additional contribution. Now, other than that, the rest all the same area. There's no other things we see here. That's why a student that do differential approach will do what? They will just show down outsourcing fee 30, salary reduced by 12, electricity increased by 3,002, extra contribution 15. So it's the same as these two columns, but you just minus and show the difference. But you do less figure. Now, but not all students can do that one because they feel very not comfortable to see the difference. If you cannot do that, then you just do like that. Show two columns. Okay. So now we see that maintaining your own marketing function will cost you 64. And then if you outsource, right, it will only cost you 19,800. Is it correct? So low, man? 30, 24, sorry, 58.2. 58.2. So the difference means that it will be 5,008 cheaper if you outsource. Okay, that you get an annual saving from outsourcing. But the problem is there will be a one-off redundancy costs. If we outsource, how much is the redundancy cost? Now, 3/4 of your 48, 70%. So the redundancy cost will come to what I put RM 25,002. So if you ask like worth it or not to outsource, now if you are just talking about the annual cash flow, I can say outsourcing is cheaper that it will cost 5,008 cheaper than you do it on your own. But there's one big amount that you cannot ignore. But the big amount is one-off. You only pay one time, 25,002 redundancy. Now, if this amount you pay, of course, then you will see that you make a loss already. But of course, every year you save 5,000 eventually in the long run, it will still be cheaper. But then you must decide what is your preference. So do you want to lose 25,000 now to exchange an annual saving of 5,008, which might take you how long to break even? 25,002 divide 5,008. Now you need about 4 years plus. Okay, 4 years plus. Then you can break even. So some business will say don't want, not worth it, too long. Some will say it's okay, long-term saving. So it's up to you. But the issue now is annually there will be a saving, but there will still be an there'll still be a one-off redundancy payment, which is 25,000. So if you take that into account, the first year is lost. So this amount, it will need about 4.3 years to break even. Okay. Now we go to B. Usually they like to ask this in the exam. When you do outsourcing, why do you think it's good? So what are the advantages from outsourcing? So if your company only very small with not much of profit, will you get people to do your accounts or will you employ your own accountant? You don't have much transaction, your profit is not big, so do you want to pay to employ an accountant or you get people to do the accounts for you outside? Now then you realize that do accounts could be cheaper, right? I get people to do 1 month, I pay 300. 300 can employ accountant or not? Accounts clerk also cannot employ. So that's why we do outsourcing, could be because number one, it's cheaper when business is still small. Okay, what else? Now we always believe the outsourcer is always better because they are doing business, right? So when they do business, they're going to be good. If they are not good, how to do business? That's why they have to update themselves, they have to learn, they have to improve. So we always think outsourcer is of quality. We have access to pool of expert. So the good thing is quality. So what other advantage we get from outsourcing? Now we can also learn from outsourcer before you can start on your own. Okay, so what we do is we will write on. Okay, we'll write on to learn from outsourcer before you set up your own. Okay, we are trying to copy their system, their technique. Alright, so there's some advantage of why we do it. Okay, and obviously when you do outsourcing, you have less problem because you don't have to deal with your own people. You know, you're gonna manage your own staff. Recruitment is an issue. The staff may not be obedient. Managing human resources. So all these are very stressful. So outsourcing allows us to avoid stress from managing your own staff. Okay, now this is some of the good things when we outsource. Alright, there's a lot more that you can think of. For example, outsourcing is fast. You want it, you can have it. You don't have to wait. Okay, now you want to do things on your own, you employ the staff. So that's why we always say outsourcing, you can have it ad hoc. That means you want it, you can have it. Anytime is instantaneous. Now, look at some problem that when you do outsourcing, why is it bad? What problems that you might face? Now, long run, we can say that it can be more expensive when you outsource, because it depends on size. You only 2 person, you eat outside is cheaper rather than you cook at home. But if you got 20 person, every time eat outside, you can see how expensive it's going to be. So it's always better to eat at home again. So that's why you see that there's always a curve, a turning point, that from cheap when you're small, outsourcing can be very expensive when you become very big. It's cheaper if you have your own people, okay? So when your size is getting larger, you find that outsourcing is no longer cheap. Now, outsourcers are not your own staff. They only provide service. So unlike your own staff, they must take all instruction from you. So these people, they only take your job, then they do it their way. You cannot control so much. Right? So there's always lack of control. Okay? You can pass them the work. You can tell them your requirement. But you cannot control them as how you control your own staff. Okay? So there's a bit different. Now, number 3, outsourcer will also have lack of sense of belonging. They have no loyalty. Because they are not your staff. Okay? So when they do work, their attitude can be very different. So a lot of things your staff may go extra mile for you. They don't mind. They say, okay, I'll do for you. I don't charge you one. As a staff, it's part of my salary. Never mind, I'll do for you. But outsourcer will be, you want me to do, I'll do until here. You want extra, can pay long. So anything extra, pay long. So between you and them is all money. So this is the difference if you outsource. So you just engage them for one work. You don't expect them to give more because they are not your staff. They are not loyal to you. Okay. Now then, by getting outsourcer to do the work, you actually share information to outsider. Or we say you share secret to outsider, which can be a risk for you. Okay. Number 5, the problem with outsourcer is continuity in the job, especially when they discontinue the service. When they discontinue service, so you have problem with continuity, especially when you need to pass on the job from one guy to another guy. Okay? That's why you see those companies sometimes they say, we don't change the secretary. This secretary is so long with us, they know everything. Then we change our I got to explain over again. They don't like that kind of thing. That's why they want to stay on with the same company. You know? Now, but what if the company themselves is stopping? What if they don't want to do the business? So this is the problem you face. So when you outsource, that kind of issues will come in. Okay. Now this is some very general point. You just think logically, when you get someone outside to do the work, what will be the problem? Okay. Right. So that's all about decision making. Okay, so I'll finish off all the scenarios that you can get in the exam. Okay, now there's still one linear programming question. You go back and do. Okay, now page 37. There's another example. That one I won't discuss. The answer is at the back. Okay, this is decision making. So you can just read out the question and then follow what I gave you in page 38. There's an answer framework, and then you just go ahead, try and do. Okay, now the answers is in page 39. You can check yourself. Okay, that's it. Right. Okay, we go on with chapter 4. Now we are still doing decision making, but now we bring one more element in decision making, the element of risk. Okay. Now before we start, we want to explore, will there be a difference between risk and uncertainty? Okay, what's the difference? Now mainly risk and uncertainty, we differentiate it with, you call it risk when you have knowledge about it. Okay, when you have knowledge about something, you call it as a risk. Now the fact that because you have knowledge about it, you can actually quantify or measure. Okay, you can actually quantify or measure. Now quantify or measure what? Now quantify or measure, example, what do you think the chance that the risk will materialize? Okay, and if the risk materialize, how much would the impact be? Now you are able to do that if you call it as a risk. Now we call it as uncertainty when it's a state of unknown. Okay, you have no knowledge. It's a state of unknown. Okay? Now, so the main distinction between you call it a risk or you call it uncertainty lies with what? Knowledge. So example. See, to me something can be a risk, but to you it can be an uncertainty. Just because maybe you do not have experience in it, so you do not know. Alright? The example, let's say I would like to go to Penang and start a college to do ACCA. Now obviously when I go to Penang and start all over again, there's always a risk that I got to face. Like maybe I may not have students, maybe that things may not work out. But because I'm already in education for so long, I understand the market. I know how it works. I can manage the market. So I will see it as a risk. But if let's say you who completely don't know anything about the market and you just want to start a business, go Penang and start a college, now what you face is a complete uncertainty. So if I ask you, you're going to start a course, the first course you start, let's say you do ACCA, the first part, how many students you're going to get? Now you say, 30? Now this 30, the number come from where? Feeling? Simply give one? Now you see, you just don't know, right? 30? That's feeling already. Just I ask you, you buy a share. For example, this share you buy at 2 ringgit. I ask you, increase until how much you sell? You say 250. Then I'll ask the question. The 250 come from where? Feeling of, I just don't know. I feel can go up to 250. Wow, like that all use feeling one. Then you all don't need to study anything. Just go back home. Everything use feeling. Close your eye, touch your heart, feeling. Then can already. Can say no. Now, which doesn't make sense. One. How can you say it's 250 when you never calculate? Whereas we will actually spend time and we will analyze the company. We look at the performance. We look at the estimates of how much they're going to get in the future. We look at a lot of factors, and then we're able to tell you that we target this company will reach 2.60. But we calculated so much, And you just come and tell me, I think 250. But based on what? When you just use feeling, thinking, is uncertainty. When you have things to calculate, to measure, to study, to analyze, it's a risk. So risk is more confident, whereas uncertainty is totally unknown. Okay? Now that's why to us, when you do decision, it's more important that if you have uncertainty, to decision maker, if you have uncertainty, you got to convert it to risk. Now, how do you convert it to risk? You convert something to risk by gaining knowledge. That's what you do. Okay? So it's that simple. Everything is the same one. You open newspaper, you look at few hundred share market, the stock market, the company. You just don't know what is all these company. Then you just follow, wow, this company, wow, today drop 60 cents, tomorrow sure go up one. Then you just go and buy. That means you don't know anything. You just simply do things based on your feeling. That's uncertainty. But when you go and study, you analyze, that's called risk. Okay? Now, how do you get knowledge? Obviously, in business, if you say get knowledge, you can get knowledge on your own. How to get knowledge on your own? You experience it. That's why when you go through something and then after that you learn, that become knowledge already. But you don't have time to learn everything on your own. So you have no time, then you must get knowledge from others. Example, you can engage consultant. Then they can carry out research. Then they can report to you, which is better. Then rather than you just go ahead and do something without knowing what you're going to do, then you make a lot of blunders in your decision, then your business suffer loss. Okay. Now this is a bit about what do you mean by risk and uncertainty. Okay. Now, when we talk about decision making, when you face with risk, we realize that decision maker have very different attitude. Okay, decision maker, they have very different attitude towards taking risks. Now, the attitude that you have about taking risks is your risk appetite. How much risk that you can or you want to take. Okay, how much risk that you can or you want to take. Now, we generally divide them into categories like you could be a risk seeker or you're a risk taker. That means you are very aggressive. Okay, you're very aggressive. Now, you could be risk neutral. That means you are not those that you want to take a lot of risk, but you are not so prudent, so you're in the middle. You are very moderate. Okay, so you tend to be very moderate. Now, you can also be very risk averse. Averse means you are very prudent. So you are like afraid to take risk. That's called prudent. Afraid to take risk. You deny risk. You reject risk. Okay. So that is called risk averse. Now, although we can say that different individuals, they may have very different attitude to take risk, but actually your attitude to take risk can depend on a lot of things. Okay. So we realize that your attitude to risk taking can be influenced by various factors. Okay, so which means that in yourself you can actually be very risk averse for something, but very aggressive for different things. You can have different profiles inside you. So you cannot say that I'm averse means everything I'm averse. No, may not be. Okay. Now, So example, what would affect your risk attitude, your risk-taking attitude? Now, one is your age. You tend to take more risk when you are young. You agree, right? Huh? You think when you grow old already, you still dare to take risk? Because once you're old, you know your time is about there already. So if you lose your money, how much time do you have to make back? But if you're young, you don't care one. You lose money also, never mind. I still young, I can make back my money. So that's where the difference comes in. So age affects the risk that you want to take. Okay. Now then, sometimes we also see the amount. Okay, the amount. Which sometimes you tend to take more risk when amount is small. But if amount is big, then you suddenly become afraid of taking risk. If not, you just do a very simple experiment. Okay. Now I ask you to bet $1. Now betting this $1, you will have 20% chance you will win $5. 80% chance you lose. Worth trying or not? Chinese New Year coming lah, play a bit lah, come lah, huh? Hoi toi. So kachi all $1. Hey, one become 5 wall. You don't want Okay, I try lah. Never mind, I lose also never mind. $1 ma, Now, use the same amount, same probability, increase this. Let's say, take 50,000. If you bet 20% chance, you get back 250. Who dare to try? Suddenly is it you? No lah. But 250 wall. It's the same as the $1 just now. What? But why not suddenly you pull back? Because hey, Mr. Lau, 50,000 is my everything, I lose means I lose everything I see. Suddenly amount become affecting your attitude. That if the amount is big, you start to feel afraid. Okay? Amount is small, you're not worried. So that is the issue. That's why last time I tell them, theoretically, if you want to win in casino, you can win. Guaranteed winning one. Guaranteed. Okay. You double your bet. That's what they say, you double your bet. Okay. So imagine you bet $1. Let's say you bet $1. If you win, you win $1. You lose $1. So if you lose $1, then what you must do? You bet 2. So when you win $2, the $1 cover back your cost, man. So there's still a $1 you win, man. Now you lose again. You bet 4. Then you keep double. So when you bet 8, you bet 16. You bet until the bet so big. Then you get scared. Okay? Because last time I went to holiday with my friend in Macau. So I tell my friend, hey, you bet like that, won't lose one. So my friend said, okay, we try. So the bet smaller start with $50. 50 Macau dollar. So like Hong Kong dollar, $50. So first time you lose 50. Then we bet double, we put 100. We bet again, lost one. So we double again, 200. Also lost one. So how? Wow, say halfway here. Scratch the head. Okay, go one more time, 400. So we've been losing, So say, 4 times buy big also small. We try one last time. 800 we bet. Throw down 800. We lost again. Then now my friend look at me and say, hey, 1,600 or 1,006 like a lot like a lot. I think if we lose again then how? Then 3,200 Then we think, never mind, let go. See, we got scared. If you dare to keep go on, obviously you won't lose. But until the end, even if you double until let's say for example 3,200, sekali you win, you also win $50. Actually, this way of playing is illegal. If you play like that in the casino, they kick you out. Okay, but no gambler will gamble like that one, because gamble like that no fun. Gamble until so much, at the end $50 only. Can see not? So you don't gamble like that. So that's why these are not for gambler. And these are more for accountant. But accountant won't sit there and do this sort of thing. Because accountant until the end get scared one, like us. We penetrate, then we pull back. Really very scared because amount get very big. So this is a problem. Amount is an issue. Now another thing that really become issue is knowledge. Because if you know something and you don't know something, it makes a lot of difference. Okay? Now if you know something, you realize that you tend to take more risks. But if something that you completely don't know, you're very scared because you don't know how to handle. Okay? That's why if I ask you to buy share, then you'll be thinking, I don't know what is share market, you dare not buy. Okay, you know? So why? Because it's something that very foreign to you. Just like some people who buy share, I tell them buy future. They say, "Ayo, future 什么来的? Can you see not? Buy future got future or not? Can you see not?" Now, so this is things that you must look at your knowledge. Now, there's a lot of things that we see lah. Now, this is just some introduction to get you know that our risk attitude is actually fluctuating. It's affected by a lot of reasons. Sometimes you take more risk, sometimes you take less risk. Okay. Now, in F5, we want to see the number aspects. So, if you look at a situation, if you are facing risk that you have a lot of probability, how do you decide? Okay, how do you decide? Now, one way for us to make decision is we base on chance. Okay, one way of us making decision is we base on chance. We want to see what is the chance that we will win compared with what is the chance that we will lose. And one way of how we measure chance is we look at expected value. So basically, expected value is a weighted average outcome. Okay? Expected value is the weighted average outcome of the chance. Now, you buy 4D. Okay? You pay $1. If you win, you get 2,000. Let's say. But one number that you buy, what is the chance of you can get 2,000? Is 1 out of the 10,000 chance. You see, so it's only 0.0001. 1 out of the 10,000 chance. That's the chance of you winning. So if we convert this into expected value, we will tell you that your expected value is only 20 cents. So pay 1 ringgit to get 20 cents. You want or not? If you want, you take 1 ringgit, put on the table, I give you back 20 cents. Now, you will say that it's crazy, man, it's not worth it. Now, this is expected value. Because expected value take the average of all the probability, combine them together. That's why it's called weighted average. And when you start to weight them, you start to see, hey, the chance of you losing is higher. Right? $1 get back 20 cents. But you go and tell all the gamblers and see, those who walk in, man, they say, stop. 你蠢㗎，一溝錢換兩角，你係咪蠢嘅？ You ask him like that. Then the fellow will say, 你係咪傻嘅？一溝錢換2000 or nothing. Correct or not? He won't tell you it's 20 cents. Now only you will think it's 20 cents, but to him it's either 2,000 or nothing. There's no such thing as 20 cents. You know? Now this is what we understand about expected value. Okay, you can only use expected value in a situation that the outcome will occur repetitively. It will keep on repeating. So you cannot use expected value when you have those kind of one-off. Okay, those kind of one-off random situation. That it's a very special event. Now, see, like for example, you buy 4D in the long run. That means every time there's a bet, you go and buy. And you buy consecutively for, let's say, maybe 20, 30 years. You count and see you win or you lose. You sure lose. Very simple. You don't believe, you just go to all these 4D websites, you press any number, you check this number for the past 10 years, how many times opened before? And after that, you multiply in the 10 year, how many times you need to invest? Then you work out and see you sure lose one. That's why in the long run, if you keep doing, it's not worth it. Now, probability only apply in that way. But if something very special, one-off that you don't keep on doing, for example, I give this. Yesterday you sleep, you had a dream. Cai Shen Ye come into your dream. Then Cai Shen Ye said, I tell you, your luck come already. I give you a number, okay? So he give you 4 numbers. Let's say you give number 2222. Then suddenly you wake up. Then you wake up and say, oh, yesterday dream of Cai Shen Ye. But you never gamble. Your accountant all think about expected value, you know? Then you walk out from your house only. The first time you walk out, what? You see one car pass by, 2222. Then after that another car pass by, wow, also 2222. Wow, 这么巧的, you know? But you still not convinced. Then you walk to your office or anywhere. Then as you walk, suddenly there's a missed call you. The last 4 number 2222. Hello, sorry, wrong number. You wrong number also call me 2222. Wow, more and more time already, you know? Then go to College Bandar, pay the course fee, the receipt issued to you, ngam also 2222. Wow, one day, so many times. Tell me, you buy or you don't buy? Or you want to use expected value? See, that's the time I say it cannot be so coincident. Now your heart will start to think, no, never mind, I better try. You know? Now that's an example of what we say. That something one expected value cannot use it. Because you start to think that, hey, this is a very special reason. It's not something I'm going to do it again and again. Okay? Now, so this is the problem with EV. EV only okay if you want to evaluate something that you expect to do it a lot of time, repetitive. Now, EV is just a guide. The actual result will never be expected value. That's why I told you, like, if you buy 4D, it's either 2000 or 0. There's no 20 cents. Okay? So it's either 2000 or 0. So 20 cents is only an average result. So in actual life, you never get expected value. So especially when the expected value is distorted with such an extreme chance, the figure will become even more irrelevant. So this is the problem that we see with EV. Well, anyway, we just want to show you how to calculate the EV and how you can apply them in decision making. Now we see illustration 1. Now a company is going to start a short life product. Now this product will cost them 100,000 for the first month. If this product is well accepted, it will continue to last for the next 3 months and it will generate income of 300. Now if this product is not accepted, it will then be discontinued immediately. Now there is a 60% chance it will be well accepted. So now, do you want to launch this product? So what do you do? Okay, we see here. Now, if you launch, what will happen? Either it will be well accepted or not well accepted. Now, if the product is well accepted, what's the chance it will be well accepted? 60. So 40% must be the chance that the product will not be well accepted. Okay, so if well accepted, what will happen? Yeah, it will be 300,000. Alright? Because they say it will cost you 100,000 for the first month. If it's well accepted, it will continue to last for the next 3 months and it will generate you a net income of 300,000. Now, so if well accepted, you're going to get, for example, 100,000 for the first month, and then you will have a net income for the next 3 months. So if this project is well accepted, in total you profit 200,000. So 200,000 with 60% chance, the expected value will give us 120k. Now if this project is not well accepted, then you will suffer the loss of the first month, which is 100,000. Now the 100,000 will turn into an expected value of 40. So the expected value of your gain will become 80,000. Now because you have derived to expected value of a gain, so we are saying that the chance to profit is better than loss. Okay, since you are working out it as a gain, that means the chance of you profiting is better than your loss. Okay? Now, but the problem is you will never get a profit of 80. It's either you profit 200 or you lost 100. That's why expected value is distorted one. It's just to show you the chance only, that whether you have a better chance of gaining or better chance of losing. Okay? Now this is how we do expected value. Okay, turn to the next page. Now, if you have more than one set of probability, more than one set of probability. So what do you mean by more than one set of probability? That means there are more than one thing that you are not sure. Okay, more than one thing you are not sure. So you can have 2 or 3 more things here that they are not sure. So you have more than one set of probability. Now with more than one set of probability, your EV will be evaluated using a joint probability approach. So how do you evaluate based on the joint probability approach? Now we see an example here. Okay, they say that you want to assess desirability of selling this short life product, but you're not sure about the volume, the contribution that you're going to get, as well as the fixed costs. Okay, you're not sure about this. So now you see the example we give you is, we tell you there's probability that sales volume will be 180-60. Okay, sales quantity got 3 probability. Now that's one set. Contribution can also either be $8 or $5. Now that one also not sure. Now fixed costs also can be 400, 430 or 480. Now all in, with these 3 sets of probability, how many possible outcome you will get? How many possible outcome you get? It's 3 times 2 times 3, 18. 18 possible outcome. Now why 18? Now you think and see. If my sales is 100 at $8 at 400, that's one of it. Now 100 at $8 at 430, that's 2. 100 at $8 at 480, that's 3. Then 100 at 5 at 400 is 4. So all in, you will have 18 possibility. So with so many possibility, end of the day, do you think my chance of me making profit is higher or lower? So that's why what you must do is you work out the expected value. So how do you work out the expected value? Now I've given you a table here. So I have you to start. Now for example, 108, 400 is 1. 108, 430 is 2. 108, 480 is 3. Then I repeat 100 at 5. Then 400 again. 100 at 5, 430 again. 100 at 5, 480 again. Now then you will have to try 80. At 8 and at 5, which can be 400, 430, 480, 400, 430, 480. Okay, the line very hard to see. Now then you will have 60, which can be at 8 as well as at 5. Again, 400, 430, 480, 400, 430, 480. Now to work out how much is my expected value, I need to know my results. So I've given you the column for total contribution and then the profit. Now you just have to calculate the figure here. So we have 800, 800, 800, 500, 500, 500. So 800 minus 400, profit is 400, profit is 370, profit is 320. Then 500 minus 400 is 100, 70, 20. Right, 640, 400, 480, 300. So 240, 210, 160. 0, loss 30, loss 80. Then loss 80, loss, profit 80, profit 50, 0, loss 100, 130, 180. Now, so if you follow on possibility, you have 18 possible outcomes that this project will result in this kind of profit losses. Now, in the 18 possible outcome, there are 2 possibility you break even, and there are 5 possibility you make loss. The rest all you make profit. So if I take all these results and combine them and show the chance, so how do you do that? Now you just have to multiply with the probability. So how do you multiply with the probability? Now you follow the probability for each set. So what is the probability that it will be 100? 0.31. So anything with 100 is 0.3. Okay, then the probability that it will be 8 will be 0.4. So 5 is 0.6. And then the probability for fixed cost is 0.25, 0.5, 0.25. And then you repeat. 0.25, 0.5, 0.25. Now in the exam, they will not ask the question so long, okay? So normally they don't do that. So it's just for you to understand this is how you do joint probability. Now then you just repeat. So what is the probability that your sales will be 80? Now it will be 0.55. Okay, then followed by 0.4, then 0.6. Then the probability for fixed cost is 0.25, 0.5, 0.25, 0.25, 0.5, 0.25. Now the last set of probability is when the units are 60. Now you just use back the same probability there, 0.15. Again 0.4, 0.6. Point 25, 0.5, 0.25, 0.25, 0.5, 0.25. Okay. Now this is how we average out the results with all the probability. So what you do now is you just multiply them together. So 400 times 0.3, 0.4, 0.25. So we get it as 12. Now 370, 0.3, 0.4, 0.5. We get it as 22.2. Okay, then 320, 0.3, 0.4, 0.25, 9.6. 100, 0.3, 0.6, 0.25, 4.5, 0.3, 0.6, 0.5, 6.3, 0.3, 0.6, 0.25, 0.9, and 240, 13.2, 210, 23.1, 8.8, this is 0. Okay, then there's a loss, negative 4.95, it's another loss, negative 6.6, 80, 0.154.25, 1.2, 50, 1.5, then 0. Okay, loss of 100, 2.25, loss of 130, 5.85, finally 4.05. Now with all the results combined, how much is your expected value? So the expected value of your gain is 79.6. Okay. Now this way of doing, it's very messy, okay? But it will show you all the possibility. So you can see all the 18 possibility. Now, in the exam, I strongly don't think that they ask you something with so long. Maybe they just ask you something with 6 possibility, so it's easier to handle, okay? Now, but this is the proper way that you show one by one. See, there's actually a shortcut. Now, a shortcut is only useful if you just want to calculate the EV. So if the question is objective question, okay lah. If they want you to do the subjective question, then you need to show everything, then you cannot do the shortcut. Now, how do you do the shortcut over here? Okay. We know that the sales quantity is 100.3, 80.55, 60.15. Now this will give me the expected value of the quantity. So that will be 83,000 units. Okay, then my contribution can be 8 or 5, where the probability is 0.4 or 0.6, right? So 8 times 0.4, 5 times 0.6, it will give us 6.2. So my expected contribution is 514,600. Then my fixed cost is either 400.25, 430.5, or 480.25 as well. So my expected fixed cost will be 435,000. So if you take this and minus 514.6, your answer will be 796. Now this will be the same as what we see here. Okay. Now it's a shortcut for you to get the EV. So if you only want the EV, right, you can do like that. But if you do this approach, you will not be able to see individually which one is profit, which one is loss. Now that problem will affect you if you need to do value for perfect information. Because if you cannot see which is one good and bad, then you cannot evaluate the result. Okay. So I'm just telling you this because in case if you got objective tests, you just want to calculate EV, this is useful. Follow, okay? Right, so that's it on expected value. Right, so we stop here, okay? I'll finish here as a section. So I'll see you again next Thursday. So go back, do your linear programming homework. We'll discuss next week.